Let's bring on board Sumit Poddar, founder and CIO at Tikona Capital, joining in with us this afternoon. And Sumit, a very good afternoon to you. Thank you so much for joining in with us. And I'm just going to talk about, what didn't happen was the Nifty touching its all-time high. But Sensex didn't manage to do that while everyone was watching for the Nifty. Sensex took that step ahead. And obviously what we're seeing seems like a fight between the bulls and the bears, and that's the word that is coming in from you. So what are you seeing in terms of the markets now going forward? Should we see this correction and actually a bit of a profit booking that we're seeing coming in here that could continue for the Nifty?
Sure. Thank you for inviting me to your show, Vinny. And it is quite heartening. And last week, definitely we saw that it's a tussle between the bulls and the bears. And we are kind of looking at Nifty breaking that particular high that we had seen in December 22 as such. So, I mean, a couple of interesting things happening. Of course, fear of heights is what is making markets to see this kind of phenomena where you see that at every high levels we are seeing supplies. Of course, every other day we are seeing most of the guys or most of the FIIs rather coming out with blocks and selling out their stakes in specific companies that are there. So this is the phenomena that happens most of the times when the markets are at high. But at the same time, I mean, of course, I'm sure you have gone through our note, which is bulls versus bears. And of course, we have to apply different strategies at different point in time. Uh, Last year definitely was full of events that was largely influenced by the central bankers on the inflation or interest rate sides, and those issues are kind of coming down. So yeah, I mean, interesting times, bulls versus bears. Yes, let's see who wins. Last 1 week, we have seen bears have not allowed to at least take up things by bulls. But nonetheless, I mean, we need to kind of sit down, be disciplined, apply our strategies to our portfolio, and win over this particular situation as such.
Sumit, also I want to understand, in terms of just Nifty IT, Accenture reported its numbers last evening. Nifty IT obviously was that underperformer that we saw, and nothing exciting has happened in this space now. Fundamentally, maybe some weakness, but Nifty IT, would that be something that you would look at now, and is it an interesting time to enter the space?
So yeah, that's another interesting point that you brought up as such, and especially when markets are at high, most investors would kind of try to hunt for areas where the correction would have taken place, or if there is an underperformance. We as an investor, as a human psychologist, we will continue to look at that opportunity. But at the same time, let's dive deeper. What's happening? The growth that was happening in the developed world is actually taking a pause, and maybe the impact of inflation, impact of even the interest rates is kind of flowing down, and which is what is impacting most of the consumers in the developed world, and ultimately from consumers is flowing to the corporates out there, and which is what is impacting the spendings or tech spendings that are that is where most of these IT companies get their revenues from. So it will take some time. Nonetheless, these companies are strong companies generating fantastic cash flows, fantastic return on capital employed, and even the drivers of business are in place. But nonetheless, given the fact that we had seen a kind of a pent up demand in the past year because of high base pent up demand, one factor is that. Secondly, of course, most of the customers or clients are watching the situation, and that is why they are kind of deferring their decisions. Again, I'll bring the point that IT is not kind of finished. While there are some bears who would be talking about with advent of AI, I mean, IT as a sector is gone. But nonetheless, with AI coming in, possibly there is further complexity that brings in or comes into the picture for the corporates, and that is why the drivers are well in place. It's just that we are going through this economic slower growth or maybe economic moderation in the developed world, which is where the IT as a sector, I think it's better to let the volatility kind of settle down. We may see a kind of a dead cat bounce or things like that, which is what we have seen post Infosys result, that some of the companies had bounced back. But once possibly commentary comes in, we would see the moderation. But this year actually is a year of maybe setting up of right expectations as far as sector is concerned. But nonetheless, it's not a write-off sector. It's not something which should not be in your portfolio. One may be underweight, but at the same time, let these things moderate, and we could see this sector coming back. And lastly, I would say, and incrementally, what is happening in the market is every sector, there are leaders, there are specific drivers of those companies, and rather technology per se itself is helping those companies within that sector to create those differentiations. I hope you're getting my point, because every sector, unlike in the past or maybe post COVID, if a sector is being talked about, all the companies are able to participate in that particular uptick or maybe downtick. But I mean, look at the IT sector itself. There are few companies which are rather outperforming as compared to the whole sector. I mean, just to give an example, KPIT, look at KPIT or Tata Elxsis of the world. They are literally kind of outperforming the whole sector, despite the sector going through challenges. And same way, we could see even other sectors, the larger companies are outperforming if they are embracing the technology. And likewise, we are going to see most of the sectors seeing this phenomena where some of the companies are thriving better than the whole sector as such. While this phenomena was even there in the past, but the stark differences would keep on kind of widening is in our view as such.
Yeah, right, Sumit. So far in the FY24, if we see, we have seen a stark divergence when it comes to the mid cap, small cap, and the benchmark performance. Despite the sharp up move that we have seen in the mid cap and the small cap space, are you still more bullish on the mid cap or mid cap and small cap? And what are you advising your clients?
So yeah, thanks for that question, and good afternoon to you as well. So yes, this is another interesting point, because most of our clients or any investor would always seek to optimize their returns. And given the situation that has got created, despite the outperformance, or maybe I think March actually saw a good sell-off in mid caps and small caps, and that has come back. So while this seems to be an outperformance as far as large caps is concerned, but at the same time, we have to kind of go deep diver as go deep to see what are the drivers in those stocks or companies as such. A few couple of kind of differentiators that can really crop up is, of course, we have seen supply chain kind of easing off, which is what is going to benefit many of these mid caps or small caps as such. Similarly, raw material prices, given the commodity or energy costs coming down, a lot of small caps or mid caps are likely to benefit. And especially to give you some examples, some of the chemical companies could bottom out in 1 or 2 quarters as such in terms of their financial performance, and they would start kind of thriving as such. Similarly, even auto ancillary companies, they got impacted because of supply chain, because of energy prices, because of demand being slower. That is likely to come back. And lastly, I would say that of course, India continues to be growing at a fastest rate. Most of the customers in the developed world or companies in the developed world are looking to tie up with Indian companies, and these small cap, mid cap, actually whatever seeds they had sown in the last 10 years or maybe even post COVID, all those companies are likely to see a fantastic or a very good run in the coming decade. While these short-term fear of heights will continue to be there, but I think as an investor, we need to be bullish on mid caps as well as small caps, and these 5, 10, 15% kind of corrections in such small cap or mid cap stocks could be an interim factor as such. And keep a watch. Of course, small cap and mid cap carry an additional risk or additional effort to track extremely closely. So that needs to be in place as such, and that's what we are kind of advising our clients per se, as far as in this bears versus bulls scenario that we are seeing.
One last question on the chemical space. We are seeing some kind of pressure when it comes to chemical names like Aarti Industries, Navin Fluorine, and Deepak Nitrite. Now, what we're understanding is that the commentary coming in from the global chemical players is the fact that the entire financial year of FY24 could be weak in terms of demand, and there could be recovery only in FY25. Now, this is unlike than what the earlier commentary was from the chemical space, that they were expecting some recovery from the second quarter. So what is your view when it comes to the chemical industry?
Sure. So, I mean, so as I shared, that long-term prospects continue to be there, or maybe medium to long-term prospects continue to be there. These companies are putting capexes, investing for the future. They are kind of expanding as far as their capacity is concerned. While again, I would come to the macro part continues to be kind of weak or maybe slower as compared to past. What we would see is the companies which are kind of betting up or investing with the client in order to get their business as such is what is going to benefit. Like you mentioned the names out here. Of course, they are maneuvering first in terms of client partnerships, second in terms of coming out with newer molecules, and of course, another area of uh, opportunity with most of these companies in the fluorine space or other chemical compounds. We are seeing that with electric vehicle or even the from an overall renewable space, we could see a benefit as far as the chemicals are concerned. Nonetheless, given these outlook, yes, in the near term or maybe 1 or 2 quarters, we could see a bit of an hiccup, but at the same time, these will continue to be an uptick journey as far as the sector is concerned. And within sectors, as I mentioned, specific companies which are investing with the client, investing for the newer opportunities, rather it be chemicals for batteries or an indirect benefit of electric vehicle that would come into picture. So net, I think the setup is quite good. But at the same time, these interim issues that are kind of cropping up,
Right.
we could see things coming back as such.
Sure. Thank you so much, Sumit, for joining in with us this afternoon, giving us an understanding of the market, sectors, and stocks as well.